Then let's start the session. So we are in the management accounting of CA, and actually we are covering the part A, the cost accounting sections, that is 35% of your syllabus. And as you know, in the previous class, we have covered this introduction to management accounting area. And here what we have discussed is the financial accounts and management accounts difference and the detailed comparisons and the cost accounts and the uses of cost accounts, nature of management accounting information, and objective and scope of management accounting, and the levels of planning and controlling. So these are the areas we have covered in the previous session. And also we have seen 12 OTQ questions, objective test questions. That's a sample question of your final examination as a revision kit questions for chapter 1. And let's do some chapter roundups like the summary of the first chapter. So the data is the raw material for data processing. Data reflects to facts, events, and transactions and so forth. So data is a raw material for the data processing. It means unprocessed information. And information is a processed one. So it can give a meaningful information for the decision making, right? And the good information, there are some qualities. I think we have seen 10 or 15 qualities, hope I remember. And they are relevant, complete, accurate. And we have seen in the question, the accuracies, we don't need a complete accuracy, enough accuracy for the decision making purpose. And inspire confidence, appropriately communicated to the authorized person, the right person. And it should be in a manageable volume, timely, and the cost should be less than the benefits we are getting as a tangible and intangible benefits. And information for management we can use for the planning and control and decision making purposes in management accounting. And organization, there are some objectives or goal, we can call it as an objectives. And the strategy means the possible course of actions, the action plan to achieve the organization objectives, right? That is something called strategy. And there's a person, Anthony, he divides the management activities into three parts, that is strategic planning, management control, or operational control. It means operational level and lower level, operational or lower level, and management or tactical level, and strategic level or corporate level. We can call as it is. And a management control system, it means a system where we can measure and correct the performance of activities of employees or subordinates to make sure the activities are aligned with the objectives of an organization, right? And we have seen informations in several levels. We have to provide information to strategic level people, tactical level people, operational level people in an organization. So we can analyze three levels, right? And financial accounting systems, it ensures that assets and liabilities of business is properly accounted. At the same time, management accounting system provides specifically for the use of managers within an organization. And there are some questions we have discussed in the previous session, that is financial accounting, the main focus is for the external users needs, and the management accounting is mainly, not only mainly, only focus in the internal managers use. We are not publishing any management accounting information to the public, to the external parties, right? And the cost accounting and management accounting in terms which are often used interchangeably, but both are different, right? So cost accounting is a branch of management accounting. It means the subset of management accounting, right? So cost accounting is a part of management accounting, and cost accounting provides a bank of data. Data means we need cost account data, direct materials, direct labors, production overheads, preparing budgets, variance analysis, everything involves cost. So if we want to do management accounting for the decision making purpose, we actually need a cost account details. So both are actually different, but within the management accounting itself, the cost accounting is there. So cost accounting information in general unsuitable for decision making, because we cannot use the cost accounting details only for the decision making. We use that cost accounting details and we are processing with the management accounting techniques, then it will be usable, right? So in management accounting, monetary as also non-monetary items also we are considering. So this is the chapter roundup we have studied in the last chapter 1. Okay. So all of you okay with that chapter 1? Can you manage the questions? actual questions in your final examination? Do you have the confidence, guys? Shall I get a sono quickly, please, from all of you before I start the chapter 2? Nafis, Sajid, Jazim, Adil, Atifa, Abdurrahman, Abi, Abirami, right? Afzar, Aparna, Balini, right? Good. So, being said that, let's start chapter 2. So, the chapter 2 is a very important chapter to make sure your foundation is very well fixed in the management accounting. That is cost classification. So, the cost classification chapter 2, we are going to discuss and learn these subtopics that are components of production and service cost, and direct and indirect cost classification for profit and stock valuation, how we are going to classify the cost for the purpose of stock valuation and profit calculation, and what are the trends in the labor cost and the production overheads and full cost of sales and functional cost, and finally the cost classification for profit measurement and stock valuation. So there is another heading also, so I'll change that one later. And once we discuss these all the topics, there will be a chapter roundup that I will discuss once we finish this chapter. And in your revision kit, there are almost 45 questions, right? So there are 45 questions we have to discuss for this chapter. I think most probably it will take 2 days to, it means the 2 classes to finish this chapter. I will try to finish all of the theory parts as well as the revision kit questions in today's session. And there are some calculation parts that will be discussed in tomorrow's session, so next classes, right? That is our plan for today's session. So let's dive into the chapters deeply. The components of production and service cost, right? So the total cost components, it means if an organization incur cost, there will be subcomponents, right? So subcomponents in the sense, give me a second. Right. So cost components in the sense, there are three components. The first one is we will have some sort of material cost. It might be direct materials or indirect materials, but in our cost components, we must have some material cost. Includes direct materials as well as indirect materials. So we can call this as a direct material cost as well as indirect material cost. So DM also IDM, direct materials and indirect materials, as well as labor cost. So the labor cost also it consider direct labors or direct wages, also indirect labors, and other expenses. This also we can consider as a indirect other expenses. So direct other expenses also we can consider as a indirect other expenses. Direct other expenses and indirect other expenses. So the material components means, guys, if we want to manufacture some goods or services, we must need some sort of materials and we need some sort of labor contribution. It might be skilled labors or unskilled labors, direct labors or indirect labors, we need them. And there are some other expenses. It might be directly related to the product or indirectly related to the product. So that's how we are having a three components in total cost components. That is direct materials as well as material cost, labor cost, also other expenses. So I'm not gonna discuss very deeply with the definitions and so much of things. Only the point. Then we will discuss the actual questions, right? It will make more sense and more suitable and more better approach for your examinations, and we can save a lot of time without wasting the time on irrelevant topics, right? So the materials means the raw materials we used. It means, for example, if you're running a bakery, you will buy some flour, sugar, sometimes some eggs, right? For to make some bread and cakes. So these are material cost. So these material cost, it might be involved as a direct materials or indirect materials. We will discuss what does it mean by direct materials and indirect materials very deeply in other chapters, right? And the labor cost. So labor cost means the wages and salaries. Wages, the term we are using for the unskilled people, and the salary is the term we are using for the skilled people, people who are working on an office environment, right? And the other expenses, it may contain indirect other expenses or indirect other expenses. These are something like the rent and rates, right? Rent and rate means if you're running a bakery shop, the rent for that bakery shop, and also the electricity and gas bills, right? So electricity bills, if you are running a bakery, you will run ovens and refrigerations, right? Cooling systems, so you will have some electricity expenses, as well as there will be a depreciation for that bakery equipments, right? So you will have ovens, mixtures, and everything. So like that, there are three components. These three components, it will be direct materials as well as indirect materials, labor cost also direct labors as well as indirect labor, and other expenses also the same. But any cost, it will contain these three components. That's a basic idea. And now we will discuss what does it mean by direct and indirect cost. As I told you earlier, in material cost also we have direct materials and indirect materials. In labor cost also we have direct labors and indirect labors. Direct other expenses also we have, and as well as the indirect other expenses. So the direct cost, in definition, the direct cost means the cost directly traceable to the product or service or a department. The key word is here directly traceable, right? If you made a one full product that is complete, right, and it is ready for sale, then we can identify we have incurred for this particular unit this much of materials, this much of labor, this much of other expenses. Then it is called directly traceable to the product or service or particular department. So you can say for this particular department, this much of cost incurred, or this particular service, this much of cost is incurred, or this particular product, this much of direct labors, direct materials, and direct other expenses incurred. So if you are able to identify very directly for one particular unit, that is something we are referring as a direct cost. So there are some categories of direct cost. So the categories are direct material cost DM, and direct labor cost DL, and direct expenses. It means direct other expenses, that is not in the category of material or labor, but it is directly involved in the production. That is something called direct expenses, right? So a direct material cost, it's clearly identifiable in final products. As I told you earlier, clearly identifiable or clearly traceable. We can say for particular one product, this much of material cost we have incurred. It means we know 100 grams we have used this particular material. So for 1 kilogram, we know the price. So if it is 100 gram, how much we have in the first particular unit, right? So examples like components, packaging materials. So we can say these as a direct material cost. So for example, guys, if it is a furniture manufacturing business, the wood we have used for one particular product, right? If it is some companies making shoes, the leather used, right? So those are direct materials because clearly we can identify how much of leather, how much of wood, how much of like fabric in a garment production we have used for one unit. So that is direct material cost. And direct labor cost, this is also directly involved in production or service, right? For example, if you are stitching cloths in a garment, the tailor's salaries, the tailor's wages, right? So if you are running a smartphones company like Apple or Samsung, the production line workers, it means people who are touching actually the devices and directly involved in the production services. For example, assembly line workers. Assembly line workers means who are actually in the production line and working with the product very directly. And the production testers, the people who are testing the quality controls one by one. So these are the direct labor costs directly involved in the production. And the direct expenses, this is also the expenses directly associated with the specific production. It means we are hiring some tools for particularly for that product or project. There are some special equipment maintenance. And the royalty fee means if you are using someone innovation, someone design, right, someone idea, you have to pay every each unit you are gonna produce in your factory. You have to pay them every unit. For example, for every unit you have to pay 1,000 rupees, 100 rupees. It is called royalty fee. So this is also we can identify, and it is directly associated with a one particular unit. So that's what makes direct material. So if you want to identify and define what does it mean by direct material or labor or expenses, that is directly associated or directly involved or directly identifiable with a one particular unit, the final product. So that's the definition for the direct materials and direct labors and direct other expenses. We will discuss more detail in questions. Right. And the indirect cost. So indirect cost also I have said there are indirect materials cost, indirect labor cost, as well as indirect other expenses also. Right. So being said that the production overhead, so we are calling this as a production overheads. Sometimes the all direct cost we can call as a prime cost, right? If we have a direct materials and direct labors and other direct expenses, we can conclude a name for that, that is prime cost. For indirect cost, like indirect materials, indirect labors, and indirect other expenses, we can give a particular name that is production overheads, right? I hope so. You understood this. And the definition. So the cost incurred during a production or service, but not directly traceable to the final output. As I told you earlier already, the direct cost, it might be material, labor, or other expenses, but we can directly identify or traceable with a one unit of product. But the indirect materials or indirect labors or indirect other expenses, it actually incurred during the production. It's not incurred in the office environment like selling expenses or distribution expenses, marketing expenses, or administrating expenses. It is not an income statement item. Okay? It is not an income statement item like sales and distribution, administration, finance cost, other expenses. No. That is not during a production cost. But production overheads, it is a during a production, it means actually it is incurred in the factory environment. But we cannot directly traceable to the final product. That's what it makes the word indirect. So the categories of indirect cost, there are variable production overheads. We can say in the production overheads, for management accounting purposes, we will discuss this as a variable production overheads and fixed production overheads, variable non-production overheads, as well as fixed non-production overheads. Right? I think it's better we will classify this as a overheads, okay? Because no, we just keep it as it is, okay? Because everything is production overheads now we are going to discuss, so keep as it is as a production overheads. So I hope you remember what I have told you. We cannot directly traceable, that is indirect cost. So in that, the variable production overheads, the word variable is here, it makes highlights. Let's highlight this one. So the word variable and the word fixed and the variable but non-production and fixed non-production. So as we have including non-production cost also, it's better to classify categories of indirect cost. So we can say as a, for our clarity, it includes production plus non-production. So it will make more sense. So indirect cost it can incur in the environment of production. It means actually in the factories, as well as non-production. It means actually in office environment. So the indirect cost, the indirect word, it can apply to the factory environment as well as the office environment. But if you consider the production overheads, it should include the factory environment only, right? That means the variable production. So if you are using a word production, it means actually it is incurred in the factory. If you are using non-production overheads, it is not incurred in the factory environment. I hope so it makes sense. So the variable production overheads means, guys, so increase with the production. Increase with the production means if you are increasing your production, it means the level of activity. We call it as a level of activity. It means the volume, the units you're gonna produce. So if you are increasing your units or the level of activity, the cost also will increase. It means your level of activities or your units of production is zero, you don't have any cost. If you are starting 1 unit, 2 unit, 3 unit, and you are going ahead, then it will incur more cost. So, for example, we can say the electricity, right? So, the electricity for the machines, machine electricity. So, it is used in printing press. For example, if you are running a printing press, the electricity for machines used in a printing press. So, it will increase the number of copies you printed. For example, if you are printing AAT books for the students, when we are when we are outsourcing to the printing press systems, right, they will produce the books. So the number of units they are producing, it will increase the electricity cost because they have to run the machines for a long hours. For 1,000 units it takes might be 3 hours. For a 2,000 units it might take to run the machines for a 4 hours. So the electricity consumption will increase, right? So these are variable production cost. So if we are not printing, we are switch off these machines, then there is no electricity consumption. So the cost is zero. So that is something makes sense for the variable cost, right? And the fixed production cost is it's do not vary, right? So here you can see the variable production that is increase with the production. So we can say the word production, or there's another term word that is called level of activity, right? Or increase with units produced, right? So these are the words we can use. And for the fixed production overheads that is in the factory environment, it's do not vary with the production volume or the level of activities or the production, whatever we call. So it is fixed. For example, the rent we are paying for the factory, right? So monthly factory rent or the salaries of production supervisors, so it remain constant. It means it's not changing month wise. It's not changing every unit we are gonna produce, or if we do not produce any goods or services for that particular month, we are gonna anyhow incur these kind of expenses, right? We have to pay our production supervisor salary even there is no production in the factory, right? So even if we do not use the factory for a 2 months period, we have to pay the factory rent for that particular 2 month period. That is something fixed production overheads. Now, the variable cost, but is that is non-production. Non-production means what? Non-production means it is not actually incurred in the actual production environment. It means it's not incurred in the factory environment. So it is actually in office environment. Like increase the post production. So post production means after we have done each and every steps in our factory, we got our final product. Now we have to deliver these goods. It means we have to distribute the goods to the customers. So that is carriage outwards cost, right? So that is, it's not a production environment cost. That is what it is in the non-production cost. It actually will be in the income statement, not in the production cost statement, right? So the delivery cost, like, I hope so you can have some clarity. Uh, Another example is if you are using Daras or Amazon's AliExpress or Amazon's, and there is a new kind of competitor in the market, Temu, right? There is a new Chinese app is coming into Sri Lanka, right? So if you are ordering the goods, they already made a production, or they might be purchased the goods from some actual manufacturers. So they have to ship your goods, right? So the shipping cost that increase with the volume of products sold online. So if they are selling 2 units. So for 2 units shipping cost only. So if they are gonna sell 1,000 units, it will cost 1,000 units shipping cost. So it's vary with the units, but it is not in the factory environment. Already the goods are purchased or already the goods are manufactured. Right? So that's what we are calling that as a non-production. It is not in the environment of factory. Already the goods are manufactured and it is in the sellable stage. So actually this non-production cost, it might be fixed or it might be variable. These are income statement items. So I can mention as it, this is as a, so income statement item. Even if it is a variable non-production cost or variable fixed cost, these are income statement item. It's not as a part of the production cost calculation. And the other one is the fixed non-production overheads. This also remains constant. It means there is no change, but it is after the post-production, right? So the key word is here. This non-production means it is incurring post-production. Post-production means once we made the product only, we are incurring these costs. That is non-production cost. Example, the sales salaries, the sales people salary, it will come under the distribution expense of the income statement, right? So salaries for marketing staff, right? It remain constant irrespective of the sales volume. For example, if you are giving a fixed salary for a salesperson, even if he doesn't make any sales, we have to pay the salary. So that is a fixed, but it is not in the environment of factory. This is after the post production of goods. So that's what it is in the fixed non-production overheads category, right? So you have to remember, guys, these overheads means we can use this word actually for the production as well as non-production, right? But what makes this difference is if it is a production overheads, it should incur in the factory environment. But if it is a non-production, it is in the office environment. So non-production cost, it might be variable or fixed. It should go to the income statement, not in the production cost calculation. But if it is a production overheads, it might be variable or fixed. It should under the production cost calculation. So hope you remember this. But anyhow, we cannot identify this non-production or production cost for particular one unit. That's what it is in the indirect cost calculation. So the cost summary is very simple. Here you can see new actual official study text. So the direct materials, it might be some components we are using directly traceable, identifiable for a particular unit. And direct labors, the assembly line, salaries, and direct expenses, the packaging for one unit, or how much we have cost. So that is total direct cost of production. So direct material, direct labor, direct expenses, we can call it as a total direct cost of production or prime cost. And the variable production overheads, you can see variable production. Only we are including the production. So variable production overheads like machine running cost and fixed production overheads like factory canteen or production director salaries, right? It is actually for the factory environment. That's what the production word is there. And the total direct and indirect cost of production, that is something called total production cost. Production, not a non-production. Then after that, we will add a variable non-production overheads that is incurred in our office environment, like salary, delivery cost. And fixed non-production cost, that is sales director salary, example. Then when we are adding all the costs, that is something refer as a total cost, not a total production cost, total cost. So I have summarized here. If you have a total direct cost calculation, guys, right here, total direct cost. So the total direct cost, there's another name for this, prime cost, right? So the prime cost, direct materials, direct labors, and direct expenses. And the total production cost, it should incur direct cost, or we can say is a prime cost, plus the variable overheads or fixed overheads. So in very detailed manner, we can say variable production overheads and fixed production overhead. right? So you have to keep in mind the word production I'm using. It means it's actually in the factory environment. It's actually incurred in the before post production stage. So the total cost, we will have the production cost. Production cost means actually it is a sum of prime cost plus all the production overheads, right? That is production cost. And we will sum the variable non-production overheads, also fixed non-production overheads to get the total cost. So you have to remember, guys, this is the formulas. So total production cost is here and the total cost is here. How we are calculating each and everything. So did you understand? Did you understand, guys? It makes sense. Nafis, how we have to calculate the total direct cost, total production cost, as well as the total cost, and why we are using the production words in the overhead, right? Production overheads is something different, and non-production overhead is something different. It means for income statement items like distribution expenses and administration expenses, finance expenses, other expenses also, we can call it as a overhead, but it is a non-production overhead. But for the factory salary, factory rent, factory equipment depreciation, factory supervisor salary, these are under the production overheads. I hope so. It makes some sense to you. Then we can discuss some questions for you. Right. So this is the direct and indirect cost calculations and some sort of theories area. And let's move to the cost classification for profit and stock valuation. Right. So we can classify these as a function wise. All right. There's some functional wise classification. So functional wise means production or manufacturing cost, administration cost, and marketing, selling, and distribution cost. As I told you earlier now, the production or manufacturing cost are associated with the production process. So when we are using the word production overheads, it means it is actually incurred in the factory environment, repeating because it's very important to have a good clarity, right? And it is included direct materials because actually it is in the production environment. So direct materials like components, parts, or transferred work between the departments like part finished goods, we can call it as it is a work in process, WIP, right? And the primary packaging materials like boxes, cartons per unit or per batch. So those are direct material costs that are also associated directly with the production process. And the direct production labor cost and inspectors, testers, specific foremen we have used particularly for that particular unit, that is direct wages. And the direct expenses, that is in the prime cost components, like special job requirement hire, we are hiring some particular tools only actually for that particular production. Then we will return that goods. And maintenance specific to certain production tools, some maintenance cost, right? So if it is that directly related to the production process, that is something under the production or manufacturing cost. And also indirect labors, indirect materials, indirect other cost also, it is in the production manufacturing environment, that also it can come. And administration cost, it's a general management expenses, right? Salaries of office managers, salaries of HR staffs, accountant salaries, right? So those are administration cost. It is not incurred in the production stage, after post production stage. And marketing, selling, and distribution cost, these are related to selling and delivering the product. So this is also in the office environment. So this is how, according to the function, the functions are production, administration, marketing, finance. These are the functions of a business, right? Right? So the production function, administration function, marketing function. So according to the function, also we can classify the cost as a production cost, administration cost, marketing cost, like that. And the traditional costing classification, guys, traditionally the production or manufacturing cost factory related expenses. That is a very traditionally for the decades we are classifying like that. So factory related expenses, administrated general office expenses like depreciation of a furniture that is used in the office environment, machinery of a office environment, right? So those are the administration costs. But If it is a machine that is used in the factory environment, that is as a manufacturing cost or production cost, right? You have to understand that. And marketing or selling distribution cost, like sales related cost, right? And distribution expenses, right? And examples of selling overheads, for example, you can have as a catalog sales promotions we are using, and sales staff salaries and commissions, and distribution overheads like packing materials, warehouse rent, transport staff pay, wages. So these are after the post production. So these are the traditional costing classifications. And the trends in labor cost. So what are the trends in labor cost? There are two trends, my dears, right? So true trends means decrease in direct labor relative to total cost due to increased automation. So this is the trend in the labor cost right now. It means there is a reduction in the direct labor cost. It means the factories are no more using the human as a direct labor because they have increased the automation. The people who are directly involved, like assembly line workers, the Tesla companies, they are using robotic arms to fit the cars parts. So there is no direct labor cost. It means a very minimal monitoring cost only, right? So the trend is going on because of the increased automation in the manufacturing environment with so much of advanced machines and AI systems and robots. So there's a decrease in the direct labor part. And the second trend is there is an increase in the skill labor cost, right? It might be direct skill or indirect skill labor, but there is a increased cost because people with the knowledge workers like accountants and other people, the AI or the machine, it cannot replace entirely because there is a leading part for the professional skill labor cost, right? So there's an increase in the skill labor cost. So these are the trends in labor cost. You must know this one for your examination purpose as well. And let's go to the production overheads. Now, production overheads means indirect labors, indirect materials, also indirect other cost. So production overheads includes three items, that is indirect materials, right? Like consumables or negligible amounts. The negligible amounts word is very important because negligible means we just ignore that item, like lubricants and cleaning supplies for machinery, right? So that kind of items are indirect because we cannot trust this for a particular one unit of product. And indirect wages means that also we cannot identify or directly traceable, or it is not directly involved with a per unit production. So supervisors, non-productive staff, wages to store assistant. So these are the indirect wages. As well as the indirect expenses like factory rent, machinery depreciation that is used in the factory environment. Those are indirect expenses. So these are very basics items. So I'm not gonna very deeply. And full cost of sales, as you know, when we are calculating the full cost of sales, I'm reminding this is not a full production cost. I'm referring as a cost of sales. What does it mean by cost of sales? I just want to confirm you, cost of sale is an item of production statement or the income statement item. Cost of sale, where we will use the term cost of sales, guys. It is in the income statement or in the production statement. The cost of sale, that is an income statement item. So if the cost of sales as an income statement item for the manufacturing company, how we will calculate, right? The full cost of sales as an income statement item, but it is a manufacturing company, then how we will include the production cost, the direct materials, how much we have incurred, and the direct wages and the direct expenses. If you add these A plus B plus C numbers, we will got prime cost, right? And after that, we will add the production overheads. Production overhead in the sense indirect materials, right? Indirect labors and indirect other cost. So all the factory supervisor salary, factory rent, factory electricity, factory depreciation charges, as well as some indirect materials and indirect other expenses, everything will come under the production overheads. So we will add that here. Then after that, we will have a full factory cost. Full factory cost means full production cost. And with that full factory cost, we have to add the administration, selling and distribution cost. Then only we will get a full cost of sales. Right? So the actual full cost that incurred for the cost of making the sales, not the cost of making the production, making the sales. Right? So in here, you can see the prime cost means direct materials and direct wages. So it's actually direct wages and direct expenses we will consider as a prime cost, as well as full factory cost. It means actually this is, we can refer as a production cost, that is prime cost plus production overheads. And full cost of sales is factory cost plus administration, selling and distribution cost. That is a full cost of sales. So hope you understand these things. And functional cost, as I told you earlier, there are some functions in the environment of business. It might be production function, administration function, selling function, distribution, research, development, financing. So according to the functional basis, we can classify the cost also. So the production cost, it is operations from raw materials to finished products, right? So from the raw materials, so that's a word, right? So from raw materials, when you are making a purchase of the raw materials, that is direct material. Then we are transferring that raw materials into a finished product. So until that, it means till the production end, that all are production cost. And administration cost like general management, it is unrelated directly to the production of sales, right? So administration cost and selling, creating the product demand, marketing, promotions, giving some discounts. So customer acquisition cost and selling distribution cost, it is preparing and delivering the finished goods. And research goods, searching for new products or some doing some innovations for the improvements. That's research cost. And after research, if we successful with our research and actually there is a demand in the market you have identified, you have to develop the product. So from decision making to full production commencement, that is something called development cost. And financing cost related to funding the operations. So if you don't have your own investment as a shareholder or as an sole entrepreneur, so you can buy, you can purchase or you can take some loans from other external parties like banks and financial institution. You have to pay the interest. That's what we are calling, we are financing our operations. So we have to incur some cost like interest, right? That is something called financing cost. These are actually according to the functions we are classifying cost. Hope you okay with this question. And the cost classification for profit measurements and stock valuation, guys, there are something called production and period cost. As I already told you, production cost are factory environment related cost. So cost directly related to goods produced or bought for a resale, that is production cost. So it can include direct materials, direct labor, also manufacturing overheads like indirect labors, indirect materials, and indirect other costs. So what does it mean by period cost? Right? So period cost. So the period cost are the cost expensed in the period incurred. For example, if the cost is incurred for a particular 1 month or particular production period, we classify it as a period cost. So it can be include selling and administrative expenses. So can you identify or can you confirm that all the income statement expenses are period cost? Is it correct? The research and development, so the sales and distribution cost, administration cost, finance cost, other expenses, all the income statement expenses are period cost. Is it true statement or false statement? Actually, it is a true statement. Why? Because when we are writing a heading for our income statements, what we are writing for the year ended, right? For example, if it is an Amal company, so Amal company's 31st March 2023 year ended income statement for the year ended. It means for that particular period, right? So that's what it mentioned as a period cost. And it is essential for accurate valuation of inventory and financial statements, right? Because we want to know how much incurred to build these products. Then only we can have how much of raw materials we have in the stock, how much of work in progress it is in our stock, how much of finished goods it is in our stock. Then we will classify as the current assets in the financial position. That is not management accounting, it is a financial accounting purpose. So if we want the correct numbers in the financial statements like inventory, under the inventory, how much the raw materials, how much the work in progress, how much the finished goods, Actually, we must have the period cost. How much we have incurred for this 1 year period for the raw materials, for the finished goods, how much we have put into the direct labors, direct materials. Then only we can calculate the WIP, working in progress amount, right? So it is essential for accurate valuation of inventory. So inventory means what? For the manufacturing company, they are not purchasing the goods from the outside people. They are making the product. They are manufacturing the products. So they must know how much for this particular 1 unit we have incurred for the direct materials, direct labors. Then only they can identify that cost and they can make it up as a inventory valuation for 1 unit of product, how much the cost, then how much we have produced, so how much we have in the inventory actually. So it is essential for the accurate valuation of financial statements as well as the inventory valuation. And according to the behavioral also, we can classify the cost. Behavioral cost classification. This is important in your exam areas as well, because most of your questions we are going to discuss today, it will be in this behavioral cost classification area. So behavioral means how this cost is behave when we increase the level of activity, or when we increase the units of productions, how it will behave. It's like it's decreasing, or it's constant, or it's like stepping up. So how it's going to behave. So the introduction to fixed and variable cost. Right. So the introduction to fixed and variable cost, the cost behavior is, guys, how costs change relative to output volume, right? So relative to output volume is the key word here. Output volume, level of activity, the units produced, everything is the same terminologies. And it influencing factors, they include number of units, the value of sales or invoice issued, right? So how many invoice we have issued, that's output volume. How many sales we made, that's output volume. How many number of units we have produced. So these are the factors will influence the behavior of the cost, right? So the key types we are going to discuss is fixed cost and variable cost, as well as the semi variable cost. So the fixed cost are, we can classify as a fixed cost, also step fixed cost. So fixed cost means is a normal fixed cost. It is fixed regardless of volume of output or the level of activities. Even if you increase your level of activity, it might be sales or it might be productions, the total cost, it is fixed. Even if it is a zero product or zero sales, you will incur this fixed cost, right? That is something called fixed cost. So the characteristics of fixed cost is it remains constant within certain activity ranges, right? And unaffected by volume of output within a relevant range. It is unaffected. Even if you are increasing the product, or if you are decreasing the product, or you are not producing the product even, it will constant. You have to incur this cost. And often known as a period cost, right? Normally, it is for the period. For 1 month period, we have to pay the rent. Whether you produce the goods or not produce the goods, you sold the goods or not sold the goods, you have to pay that. So these are period cost charged over a specific period. So examples we can include, like, rent for premises. So constant monthly or annual amount. Constant means same. There's no change, right? For example, uh, you have a factory, you have to pay monthly rent, right? Whether we are producing a goods or we are closing the factory, we have to pay that. That's a period cost as well as the fixed cost. And we can say managing director's salary, right? So he's an office employee, not a production environment. So even if it is a non-production, the manager's director's salary is a fixed annual salary. Sometime annual we will pay, or monthly we will pay, regardless of the company's output. The company might be make profit or loss, or company may make products or not. We have to pay the salary, as well as the factory rent also we can say, and the depreciation, right? Straight line basis. If it is a straight line basis, the amount we are going to charge every year or every month, it is going to be the same amount. It is not applicable for the reducing balance method, but only for the straight line method. The same amount will be applicable for annual depreciation. If it is a building or machinery or manufacturing plants, we are going to incur the same amount whether we are making the product or not. The level of activity, it is regardless of level of activity, that is constant, right? So those are the examples we can consider. And step fixed cost means, guys, this is how the graph will be, right? For certain level of activities, it is fixed. When it is reached this level of activities, then the cost will be increased. Then from that cost, for a certain activities or certain manufacturing units, for this much of volume of output, it is constant. Then after that, it will increase. Then it is how it will behave. That is called step fixed cost, right? So it is stay fixed. It is stay fixed here. It is stay fixed here. It is stay fixed here. Certain limits. So from this to this limit, it is fixed. From this to this limit, it is fixed. From this to this limit is fixed. So it is stay fixed within certain limits, then jump to a new level, right? Jump to a new level. For example, guys, hiring staff salary. For example, a supermarket like Gagil's in Sri Lanka. So they can hire some extra cashiers with customer traffic, right? So consistently exceeds at a certain threshold. So it will increase the total fixed salary expense. For example, so they are saying your fixed salary is normally 10,000 rupees. But for a 1 month period, if you serve for more than 100 customers, we will pay you more amount. For another 200 customers, we will pay you more amount. So that's a step fixed cost. So the fixed within certain activity ranges jump to a new level beyond those changes. Example, a machinery depreciation after capacity exceeds limits, right? So the depreciation charge is fixed. But when we are doing a major replacement of the parts or engine parts, or there are some major updates, then the total cost of that machinery, the cost account amount, it is increased. So the actual worth of the machine is increased. Now, even when we are doing the straight line method, we are gonna incur more depreciation, right? Because the lifetime of the machinery it is not changed, but the total cost, the net worth of the machine is increased, right? And also the rent also for a 1 year period, or otherwise one particular volume of output it is fixed, then they will increase. So a basic pay for additional employees, so like that we can consider some step fixed cost items also there, right? And variable cost, simply normally variable cost like this, change directly and proportionately with output. If there is no production, there is no volume of output, it is zero. When you are increasing the volume of output, it will try to increase proportionately, a direct relationship. But it is constant per unit, my dear, right? It is a very important point is the variable costs are constant per unit produced. It means, for example, it will be like this. For a 1 unit of variable cost, it is actually fixed one. It will be a very straight line curve, right? But for a total variable cost, it is something like this, right? So the characteristics are here. It changes directly with the production volume and directly vary with output level and constant per unit produced. That's the main important one. So examples are here, the raw material cost. Normally, all the direct cost are variable cost, right? I can say you as an additional point here. Normally, all the direct cost are variable cost. Why? Because we can identify for a 1 unit. So if we are increasing the units, actually it will increase the cost. So all the direct costs are variable cost. So we can identify the direct raw materials, direct labors, and sales commission, right? Quantity discount, everything. So raw materials means, for example, in a wood manufacturing companies, the wood they used in the furniture production is a raw materials. So hourly wages of assembly workers, direct labors, and the insurance agents, their commissions based on the number of policies. That's a sales commission. And sometimes we will receive some quantity discount, right? For example, garment workers, they will receive some bonuses per extra unit they are produced beyond their normal standard quotas. So those are will be variable cost. Okay. And The variable cost patterns. There are some patterns, it will affect the variable cost. Like the graph is, the normal traditional graph is like this. But sometimes there are some factors that will affect. The first one is, guys, the discounts affecting unit cost. Affecting unit cost, okay? This is a very important word here. I'll highlight that particular word here. Affecting unit cost. If we are receiving some discount, but it's reducing our unit cost, then the variable cost is going to be affected. The graph is something like that. So imagine up to a given level of activity, the purchase price per unit of raw material is constant. For example, if you are buying 1,000 units of products, or if you are making, or if you are manufacturing 1,000 units of product, the purchase price per unit is same. But when you are making more than 1,000, so they are giving a discount. For example, if you are buying 1,000 units, the per unit cost is 100 rupees. If you are buying more than 1,000 units, like 1,500 units, for entire 1,500 units, we will give you for a 90 rupees, right? So imagine if up to a given level of activity, the purchase price per unit of raw material is constant. After that point, a quantity discount is given. So the price per unit is low for further purchases, and also retrospectively. Retrospectively means for the previous. If you buy 1,001 units, for entire 1,001 units, retrospectively, the unit price reduction is applicable. But if you buy only 1,000 products, you will get a same price. There's no discount. So it is retrospectively applied to all the units already purchased. How the graph will be? The graph will be like this, my dears. The graph will be like this. So I'll explain to you, right? So for example, imagine you are buying some raw materials, right? You are gonna buy some direct raw materials. So if you do not buy, your cost is zero. So you are buying 1 unit, 2 unit, 5 units, 10 unit, 100 units, 1,000 units. So you will incur the cost. So it's a linear one. Linearly, proportionately, it will increase. So at first, you pay the same price per unit, no matter how many units you buy, up to a certain point. Up to this point, right? Up to this point, whatever the amount you are gonna purchase, the same per unit. For example, if it is 100 rupees, 100 rupees applicable for whatever the units you are gonna purchase until this point. But once you reach this certain quantity here, once you reach this level of activity, then let's say 100 units, the suppliers give you a discount. So he's saying if you buy 100 units, more than 100 units, or if you reach the 100 units, I will give you discount. But until you reach that 100 units, there is no discount. Even if you buy 99 units, within that 99 units, there is no discount. So the unit price is not going to affect. So these discounts will lower the price per unit. Not only for the additional units you are going to purchase, not only for the additional units after this point, not only for the additional point, it also, right? All the units are already purchased from this area. This area also, it will reduce the unit cost. So the total cost suddenly will slow down, right? So suddenly goes down your total cost because we are having the total cost here. So you are considering the total cost until this point as a high amount because this is the, if it is a unit price, then you are multiplying with the level of activity, the total cost is high. But now when you reach this, the total cost is going to be reduced because the unit price is here. Now it is reduced from here to here. So the unit price and the level of activity, the total cost is going to be less. That's what the graph goes down. And it's making the overall cheaper for all the units you are going to purchase from 0 to here, right? In short, guys, when I'm trying to convey in a short, if you buy enough units, you get a lower price for all the units you purchased, even the previous ones. For example, I'll say some example here. See, so for example, first 100 units, they're saying first 100 units, right? The cost per unit is The first 100 units, $10 per unit, okay? For example, if it is the 100 level, we will incur per unit is $10. That's a variable cost. Then they're saying after 100 units, reached, all units you purchased. So including the earlier ones, now become rupees 8 per unit, right? Just think about it. So now what's the cost? For the first 100 units, up to the 100 units, the cost is 100 into 10, it is 1000, right? So the total cost is, that is 1000. But now, once you reach the 100 units, they are offering to 8 rupees per unit. So now the total cost is how much? It is gonna 8000, right? So 800. So that's what the sudden drop, because that's what the total cost is 1000 to 800 because of the unit price is gonna reduced. And it is applicable to all the further units you are gonna purchase. Did you understand this concept and graph, guys? I tried my level best to convey this to you. Did you understand? Shall I get a yes quickly, please, from all the people? Nafis, Sajid, Jazim, Abdurrahman, Abi, Abirami, Afzab, Amjad, Aparna, Balini, Hartihan, Jamuna, Kavita, Kavya, Fazmi, Rinosha, Netra, Ideh Rupan, Subhashini, Vidurshan, Zainab. But the units not increase, no, Fazmi. No, the units are increasing, right? If you are gonna buy more than 100 units, then it will be applicable only 8 rupees per unit, right? For example, for the same 100 units, for example, if you buy, okay, let's say the same first 100 units, and after you buy the 100 units only, it will be 8 rupees per unit. Not for the 100 units after you reach the 100 units, okay? It's a very simple thing, you can understand. And the second point is, imagine up to a given level of activity, the same example, the purchase price, the per unit of raw material is constant. There is no change, like the same, but there is a difference. After that point, a discount is given so that the price per unit is lower for the further prices, but not for the units already purchased. But in the previous examples we have discussed, that is retrospectively applied to the all the units already purchased. But now that is only for the future goods you are going to purchase, not for the already purchased units. How the graph will be here? The graph will be like this. There is no goes down. It will be, the curve will be little bit, the slope of the curve will be changed. There is no slowdown in the unit price. Because of why? Because, guys, I'll tell some example. Similar to the first scenario initially, you buy raw materials at a constant price per unit. So per unit is same until this, right, area. After you reach a certain level, against, let's say it's 100 units, okay? Let's say 100 units. The supplier offers a discount. But however, this discount only applies to the units after you're gonna purchase. The price a little bit lower. But it is not applicable for the previous units you have purchased. It is applicable only for the future units you are gonna purchase. Right? However, the discount only applies to the units bought after this point, not the units you bought before. So your previous units stay at the original price here. The discount only applies to the units bought after this point, not to the units you bought before. So your unit stay, your previous units stay at a higher original price, and only the future units are cheaper. So in short, guys, if you buy enough units, you get a lower price only for the units purchased after reaching the discount point, not the previous ones. So then the graph will be here. So the difference between this graph and this graph, here the discount is applicable for the previously purchased units, but here the discount is only applied for the future goods after you reach the certain point. You got the point? For example, guys, I will tell you one example here. So here they're saying the same thing, right? So I can take this one here also. So first 100 units, right? First 100 units, it is rupees 10 per unit. So the total cost is going to be make 1,000, right? So then they're saying after 100 units, remember the words here I have mentioned after 100 units reached, right? Here after 100 units, they're saying the future unit cost, the future unit cost is rupees 8 per unit, right? But the initial 100 units is remain at $10 each. So the result, the initial 100 units at $10, we have to pay $1,000 or 1,000 rupees. Additional units, we have to pay 8 rupees. So that's what the graph is, something like that. So only one point is there. If your discount is applicable after reaching the one point for the entire units, the graph will be like that for the variable cost. But if you are receiving a discount, but it is only applicable after reaching the certain point only for the future goods, the graph will be like this. If you remember this point only, it's enough to tackle with the questions. I hope so it made sense. Right. And productivity bonuses also we can see. Some productivity bonuses. Give me a second. Right. So for productivity to employees might be variable once a certain level of output is achieved. Like that also here. For example, here for productivity to employees might be variable once a certain level of output is reached. Right? So variable once a certain level of output is achieved. What does it mean by? So it means by, guys, for this particular A point, right? For this particular A point, it is a same amount, right? So they are gonna make no any salaries or something. Once they reach this amount, then the bonus will be given. So if you see the bonus, until a unit produced, there is no bonus. Normal salary will be there. That's no problem. Only for the bonus, until you reach this particular, for example, 100 units. So until 100 units, there is no bonus. Only a normal salary. Until you reach this 100 units, you will get a bonus per unit. So the graph, the variable graph will be like this for the bonus. Hope you remember the very simple concept. And some curvilinear cost, right? Curvilinear cost means non-linear relationship between cost and volume. Non-linear means, guys, there is no straight line graph. This is something like this. So if the graph is not a straight line, right, this is something called non-linear. We can call this a curvilinear and non-linear. So variable cost, like the cost can be like this or the cost can be like this, right? So the first one is each extra unit of output in graph A causes a less than proportionate increase in cost, whereas graph B, each extra unit of output causes a more than proportionate increase in cost. And the cost of a piecework scheme for individual workers with differential rates could behave in a curvilinear fashion. In it, if the rates increase by small amounts at progressively higher output level. Just keep as it is. I will discuss it later, right? So example include piecework schemes with a differential rate. So I will discuss this later once we discuss some questions. right? That is all about the variable cost. And the semi-variable cost. So the semi-variable cost means the cost with both the fixed and variable elements. For example, electricity bills, there is a fixed standing charge. Even you are not using the electricity for a 1 month period, you have to pay some fixed charges. Then the consumed amount of electricity bills, right? And the salesperson salary, there will be a fixed basic salary and plus commissions for additional purchases, additional sales he made. And the vehicle cost, like a fixed insurance is there, and there's a variable cost of fuel and maintenance. So those are fixed elements also there, and also variable elements also there. Like telephone charges, like a fixed line rental plus variable call charges, like that. So that's a semi-variable cost. So we will see that graphs and everything in the question. And other cost behavior patterns, special patterns are there. Some special variable cost with a maximum limits. So this is a maximum cost. It means the variable cost is limited. They will say only until you reach the 1,000 units, right? The cost will be variable. It means the unit cost we are gonna offer until you reach 1,000 units, the same level. Then after that, whatever the volume of output, the unit cost we are not gonna change it, but the total cost is remains same. So the maximum cost is here. So until you reach this point, it's the total cost is vary, but after that, how much the units we are gonna produce, the total cost is going to be the same. That is a maximum limit for the variable cost. And variable cost with the minimum charges, so there is a minimum charge until you reach the level of output. And after you reach this point, then there will be a increasing pattern. So these are the variable cost with minimum limits and minimum charges. And assumptions about cost behavior, guys. When we are doing cost calculations, there are some assumptions. The common assumptions are the cost typically fixed, variable, or mixed with a relevant range. Right? This is the very first assumptions we are doing once we are doing questions. Like, for example, we are assuming the only the fixed cost or the variable cost or mixed cost. Like there's an variable element, also fixed element. That's a mixed cost with a relevant ranges. And the departmental cost contains fixed and variable elements. So each and every department, there will be some fixed cost as well as some variable cost. It might be related to the production or it might be related with the factory environment, but there will be fixed and variable elements, as well as the cost to rise linearly with the increasing activity. So linearly, not non-linear. For the costing purposes, we are making it's linearly, right? Not non-linear. And the high-low method relies on linear cost behavior, right? This is also one of the important factor because we will discuss the high-low method later in this chapter. So we are assuming the linear method. Those are the common assumptions we are using when we are doing the cost behavior section, right? So that's the behavioral cost classification part, guys. And cost classification for decision making, we will classify as a relevant cost and non-relevant cost. So for the decision making purposes, if we are in the decision making environment, how we are gonna classify this cost, that is as a relevant cost as well as the non-relevant cost. So relevant cost means, the definition is here, the future incremental cash flows directly resulting from a decision. Because of your decision, right? That's a future cost. Let me highlight these words. These are very important words to define the relevant cost. It is a future cost, right? Relevant cost are future cost. And relevant cost are incremental cost. Incremental means if you are incurring that particular level of output or particular decision only, it will incur. Otherwise, there's no relevant cost. And it is actual cash flows you are expecting to incur as a cash, not as a depreciation. Like, so it's directly resulting from a decision. And the key characteristics are, as I told you earlier, it is a future cost. Only a future expenses are relevant. Past cost like sunk cost or committed cost, already you have committed, already you have paid. That is not gonna affect the decision you are gonna make in the future. So the future cost only we are considering as a relevant cost. Also, only the real cash flows expenses considered. Non-cash items like depreciations we are excluding. because we are not going to pay anything as a depreciation to anyone in the future. So only the real cash flows we are considering, and the incremental additional cost directly arising from a specific decision. Because of a decision only, this cost is incurred. No sunk cost. That's what the key characteristics are. The relevant cost, all are future cost, cash flows, and incremental cost. And the types of relevant cost, there are avoidable cost, specific fixed cost, and opportunity cost. Avoidable cost means the cost that can be avoided depending on that decision. Right? So production specific cost. Right? If you are avoiding that decisions, you are not gonna make that decision, we can avoid that cost. And there are some specific fixed cost, additional fixed cost required for the increased production. Right? If you want to increase that production, additionally you have to make some fixed cost that is relevant for that particular decision. If you have only that machinery, you can make the production, then the fixed cost of that machinery is a relevant cost of your decision. And opportunity cost also relevant cost. Cost of foregone benefits due to the resource allocation changes. If you are shifting resources from one product to another, you are losing the particular revenue, particular contribution that product. No. So the opportunity cost also we have to consider in making decisions, when we making decisions. So examples of opportunity cost: shifting production from product A to product B, it results in reduced sales for product A. So the lost revenues is relevant to opportunity cost we have to consider when we are making decisions. So those are the types of relevant cost. And the non-relevant cost. So the non-relevant cost unaffected by the decision. For example, sunk cost. Already you have paid the cost. Even if you are making the decisions to buy something, it is unaffected. Paid is paid. That is sunk cost. Past cost is past. Right? So the types of non-relevant cost is, we are not considering this cost, sunk cost. When we are making decision, we are not considering this cost as a relevant cost. Already incurred cost that cannot be changed, like past research cost. It is incurred. We have paid. Whether we are going to make that particular product to the market or not, it is paid. Past cost. And committed. Already you have committed. I will pay this amount. Whether I'm going to make this product or not, I'm going to pay. So you cannot change it. Your decision, it's not going to change that committed cost. So the future unavoidable cost. It is a future cost, but it is unavoidable, arising from prior obligations, contractual payments, or legal obligations. Even if it is a future payment, future obligations, you cannot avoid. So that is not a relevant cost. And non-cash flow cost, like accounting adjustment, like depreciation, we are not considered. And notional cost, like hypothetical cost allocated for decision-making purposes, something notional rent, right? And general fixed overheads, like fixed expenses unrelated to the decision at hand, ongoing machine maintenance. Whether we are gonna make some decision or not, we have to pay that maintenance cost. So those are unrelated. So we will discuss and come back again when we are doing the questions of this area, because relevant cost items and relevant cost areas, it will make more sense when we are actually dealing with the question papers. And there's another classification for the decision making purpose: controllable and non-controllable cost. So the definition of controllable cost means, guys, the cost influenced by managerial decisions or actions. For example, if you are a budget holder, if you are a person in charge for that particular department, you can control that cost. You can reduce the cost, you can increase the cost. That is controllable. And uncontrollable means the cost unaffected by managerial action within a certain period. For one pay period, you cannot do anything with that cost. You cannot control that cost. That is uncontrollable. So those are manageable. So only the controllable cost we can use for the decision making purpose, right? Whether we are making any decisions, we cannot control some cost. It's going to happen. So it is not going to influence our decisions. That is controllable and uncontrollable cost. So examples of cost control: the controllable cost, the short-term controllability. So the cost control, variable cost within departments influenced by efficient resource management. Right? If you are managing your resource very efficiently, it means least input, maximize the output. That is efficient. Right? So short-term controllability is there. And levels of management, the cost uncontrollable by junior managers may be controllable by senior managers. For example, for the junior managers in the lower level, operational level, they cannot take, they don't have that authority to control that cost. But in the tactical level or management level or upper level, strategic level, yes, the CEO can control that cost. For example, reducing the overtime by hiring additional staff. The operational level managers, they don't have that power, they don't have that authority. But the managerial level managers, they have that power. and cost uncontrollable in one department but controllable in another department. So the material cost due to the purchasing decisions or production waste. It cannot control by the operational level, but it can controllable by the strategic level. So the levels of management, according to the short-term controllability, the cost controls will be differ. And the long-term versus short-term control, the short-term non-controllable costs are like inflation-driven expenditure increases. Inflation, it is going to happen, but within short period, the inflation is there. So the expenditure-driven expenses. And long-term controls like cost reduced through strategic decisions, like investing in new technology, new machine. So it will be a controllable cost, but it's in the long term only. We cannot get immediate benefits. So those are the theories for the controllable and non-controllable, right? So guys, I have finished 80% of your cost classification. Now we are gonna move to the question paper area. Sorry for taking long time to explain the theories, because easily we can deal with the questions. Right, so let's do the revision kit questions. So the first question, let's see. Read the question, guys. Which one of the following would be classed as indirect labor? Right? The A, machine operators in a company manufacturing washing machines. B, a store's assistant in a factory store. Plumbers in a construction company. A consultant in a firm of management consultants. Which one of the following would be classed as an indirect labor? What is your answer? A, B, C, D. Please give me the numbers. What is your answer for 2.1? Subhashini is telling B, Fazmi is telling D as an answer. It means a consultant in a firm of management consultants. Kavya, second one, it means B. Jamuna, B. Shwadi, B. Abdurrahman, B. So the majority is going with B, is it? Students, if it is wrong or correct, please tell me the answer. Please try. Then only you can do the actual exams. I'm expecting your answers from all the people. So Netra is referring B, Balini B, Abi B. Yes, the majority of the people are referring B as an answer. Right, so let's discuss what we have learned as the indirect labor. Just go with the theory. Here, see, in the production overheads, we have indirect wages or indirect labors. Supervisors, non-productive staff, wages to store assistant. Can you remember? Wages to store assistant. We cannot track for one unit of product, right? They are not very directly related. Non-productive staff, supervisors, they are not directly related with the product. We cannot identify for one unit of supervisors how much we have expensed, or one unit for wages to store assistant, how much we have paid for one unit. We cannot identify, right? So guys, here see, machine operators in a company manufacturing washing machines. So if it is a company manufacturing washing machines, the machine operators who are actually directly related with that company, those are direct labor. How much we have paid for that operator, right? Because washing machine manufacturing washing machines company, they have to operate that washing machines, right? It's actually not a washing machines. The machine means, the machine operators means who are the person actually having the machine to produce the washing machines. It's not an end users. The machine operators means it's not referring the end users of the washing machine. The machine means the machine that producing the washing machines, like robotic machines, the big giant machines. So those machine operators are directly involving in the manufacturing. They are direct cost. We can trust how many hours they have spent for one particular machine. So we can identify how much we have spent for them. And store assistant in a factory store, no. So he will assist for the supervisors, he will assist for some labors, he will assist for some particular machines, he will assist for some labors, no, not for others. So we cannot trust for one particular unit, and also it is not directly related with manufacturing that product, like machine operators. So that is an indirect cost. And assistant salary is a wages, right? It's a labor cost. So the probable answer is B. Let's see the other one also. Plumbers in a construction company. If it is a construction company related to constructing buildings, the plumbers are direct cost, my dears. If you are constructing a house, that is the total output. So you are paying for the plumbers, for one unit of, so one room or one particular house unit, you can measure how much we have spent. At the same time, plumbers are directly involved with the construction. We can identify and trace their product for per unit. So that's a direct cost, direct labor actually, direct wages. And a consultant in a firm of management consultants. See, the audit firms, right? The audit employees like junior levels or manager levels or partner salaries are direct labor, my dears, because they are the one providing the service directly involved. For that particular client, the audit fee we are charging, we can directly identify for the partners how much, for the junior level employees how much. There's a budget. Every audit you are engaging, there is a budget. So we can identify for that particular client. So the consultant firm also the same. The management consultants, how much hours they have spent. At the same time, they are directly involved with that service, right? That's what it is direct. So the indirect labor is only the B. Kavya, a store assistant in a factory store, that's you're mentioning B. But first me, you have referred B. A consultant in a firm of management consultant, an accountant in an accounting firm, an auditor in an audit firm, a teacher in a school. These are direct labors. Okay? I hope so you identified. So the actual answer is going to be the B. Okay? Right. And let's deal with the 2.2 question. Variable cost are conventionally deemed to which of the following? So we know variable cost. The first one is B constant per unit of output. Vary per unit of output as production volume changes. Be constant in total when production volume changes. Vary in total from period to period when production is constant. What is your answer? I need answer. Rinosha is choosing A as an answer. Balini also A. Subhasini also A. Other people? Nafiz A. Jamuna A. Shwati A. Right. Most of the people are choosing A as an answer. So what we have learned here, just see the theories, guys. Variable cost, what we have learned. Change directly with the production volume. Directly vary with the output level. Right? When we are increasing the production volume, it will increase. Right? But constant per unit produced. For each and every unit, we can say 100 rupees per direct materials, 100 rupees per direct labors. So constant per unit. That's what we have learned in variable cost. So B constant per unit of output is yes. Conventionally, that's good. But here vary per unit of output as a production volume changes. So every unit it is going to be vary, it is going to be different. No. Variable cost are direct costs. Direct costs are variable per unit, we can say. So it's not going to vary per unit. So every unit it remains same, this much of variable cost. So that's a wrong statement. And be constant in total when production volume changes. Is it constant in total? No. When you are increasing the production volume or the number of units or the level of activity, it is going to increase. That's why it's a linear curve. It is not a constant in total. It is constant per unit, not constant per not constant for the total cost. It is constant for a per unit cost. So the C is not an answer. And D vary in total from period to period, but when production is constant. Production means the level of activity is constant, but period to period is it going to be vary? No. The conventionally deemed is B constant per unit of output, as all the people are mentioned here. The A is an answer. Abhirami, B is not an answer because vary per unit means each and every unit you are going to produce, it is not going to be vary. For example, for one unit, direct material cost is 100. For the second unit, it is not going to be changed as a 200. It is remains constant. Okay. I hope so. This question also made sense to you. So by definition itself, B constant per unit of output, that is variable cost. But for the total cost, it will be change. All right. So then let's move to the 2.3 question. So the 2.3, the following is a graph of cost against the level of activity. To which one of the following costs does the graph correspond? What happened? This is the level of activity. It means the units produced or the output. So here, even in the 0 units, there is a cost. There's a fixed cost. And after that, the cost is vary. Once we increase our level of activity, the cost also increasing. So what is the correct answer? The first one is electricity bills made up of a standing charge and a variable charge. Or the B, the bonus payment to employees when the production reaches a certain level. Or the salesman's commissions payable per unit up to a maximum amount of commission. Or bulk discounts on purchases, the discount being given on all units purchased. So what is your guess here? Abhiram is choosing B as an answer. Abdurrahman A is an answer. Kavya is choosing B. Shwadi B. Balini A. Abhi A. Right? Netra is choosing A. Jamuna is B. So most of you are choosing A as an answer, but a small portion of students are choosing B as an answer. Okay, let's see. Here, see guys, you have to consider the level of activity here. Even at a 0 level, there is a cost. So the first one is electricity bills made up of a standing charge. It means standing charge means what? Fixed charge. There is a fixed charge you have to pay even you are not producing or even you are not consuming any electricity, any kilowatts you have to pay. So there is a fixed charge. And after that, for every units you are consuming the electricity, you are going to make the payment. So it makes sense. The electricity bills, they have the fixed charges. As after the fixed charges, they have the variables also. So we can consider A as an answer. Let's see the B also. Bonus payment to employees when the production reaches a certain level. So when the production reaches a certain level means what, guys? It has to start from the level of activity. Did you understand? So for example, for the second, it should be like this, the graph like this. Then only we can say at a certain level of activity, there is no bonus. Only the bonus, for example, if it is 100 units, let's say 100 units, they are going to pay the bonuses only you have produced 100 units. After the 100 units, every unit, like 101, 102, 103 units, we will pay bonuses for one unit, 10 rupees, 100 rupees. So the graph should be like this for the B one. Did you understand why I am not choosing B as an answer? So most of the people, you are Jamuna, you have considered B as an answer, Shwadi B as an answer, Kavya B as an answer. Right? Abhirami also. So there is no reaches a certain level here. Even at a 0 level, you have to pay an amount. Okay? So B is not an answer. And the C is the salesman's commissions payable per unit up to a maximum amount of commission. So how the graph will be there? If I draw that graph, it will be like this, my dears. Let me draw that graph here. salesman's commissions payable per unit up to a maximum amount of commission. For example, it will become like this. Okay, it will come like this, and up to a 100 units, then again it's going to be remain same. Okay, it will be the graph. So for example, if it is 100 units, for that 100 units only, if it is 100 units here, okay, for that 100 units, till that 100 units, we will pay salesman's commissions. For example, for reaching this amount like 10,000, until you reach the 10,000 commissions, then we will pay that amount according to the units you have sold. But after 10,000 total cost, even you are selling 1,000 units, no, we only pay the 10,000. So the graph will be like this. Okay, that's for the C. And the third one, bulk discounts on purchases, the discounts being given on all units purchased. Can you remember what we have learned here? So for the D1, the bulk discounts on purchases, so being given on all units purchased. So until we reach this amount, there is a no change. Then when we reach this amount, for the all the units, it's going to be applicable. So the graph will be like this. So we have already discussed this, right? So what's the correct answer? Right? What is that thunder mark? I can't remember. First me. So the correct answer is going to be the first one. What is that? The first one is saying electricity bills made up of a standing charge. For example, standing charge you have to pay 500 rupees even if you are not using the electricity. And after that, for the each and every units, you have to pay another amount. So it make more sense with a is the correct answer. Okay, no? Same time, we have discussed discounts affecting unit cost create a various patterns, right? So here we have discussed this. Right. So being said that, let's move to the 2.4. The following graphs depict various costs. There's a graph 1, graph 2, graph 3, and graph 4. Right? Which of the graphs shows supervisor salary cost? Where one supervisor is needed for every 5 employees needed. Here the level of activity is every 5 employees. So every 5 employees reached, new supervisors. So the total cost is going to be increase. So what is the graph, guys? Graph 1, graph 2, graph 3, graph 4. A, B, C, D. What is your answer? Abhi is choosing A as an answer. Balini, A is an answer. It means the graph 1. And Rinosha also A is an answer. Alaf Sir, A is an answer. Shwadi, A is an answer. Nafiz, A. Right. So most of the people, you got the point. I'm really happy for that. So the answer is going to be what? A, my dear. What is that? We have learned the step fixed cost. What is that? Here. Fixed within a certain activity ranges. For example, here the 5 employees, that's the activity range. It is fixed, total cost. But after 5 employees, if we have a new supervisor, we have to pay the higher amount. Then again, it's going to increase. And after certain people, then again we have to hire another supervisors. Then we have to pay the total cost is higher. So the fixed within a certain activity range jump to a new level beyond these changes. So we have discussed this here. So that's what the answer is A. That's a graph 1. And let's see the 2.5 also. For the purposes of costing, the costs can be either fixed or variable or semi-variable within the normal or relevant range of output. This is the one of the assumptions we have discussed. Can you remember? When I have discussed the assumptions of costing, for the purpose of costing, the cost can be either fixed or variable or semi-variable. It means the mixed cost with normal or relevant range of output. Is it true or false? What's your answer? Is it true or false? Is it true or false? It's absolutely true, right? So we have discussed in the assumptions, I hope so. The key types also we have discussed here. The key types are fixed cost, for the variable cost as well as semi cost. Even in the assumptions about cost behavior is the common assumptions are The cost typically fixed, variable, or mixed with the relevant ranges. That's our assumption, right? So that's the part they have tested here. So the actual answer is going to be true. And let's discuss about 2.6 question also. A firm has to pay rupees 100 per unit, okay, per unit. Each and every unit they are gonna produce, they have to pay 100 royalty to the inventor of a device which it manufactured and sells, right? For the royalty charge. The royalty charge would be classified in the firm's accounts as a selling expense or direct expense or production overheads or administrative overhead. What is your answer? So Balin is choosing B as an answer. Renosha is choosing B as an answer. Aparna is C as an answer. Abhi, B. What about other people? Shwadi, B. Nafis, B. And Jamuna is choosing B. Right? So most of you are choosing B as an answer. Right? So we know selling expense, it is unrelated with the selling. So royalty is not a selling expenses. Right? It is manufactures and sales. Right? We are manufacturing, we are selling. So the royalty charge we are paying at the manufacturing stage, not in the selling stage. So we cannot classify the royalty charges as a selling expense because it is an income statement item. And the direct expense is what we have learned about direct expenses, my dears. Direct expenses, in the direct expenses sections, expenses directly associated with the specific production. Even I have included the royalty fee as an examples. Right? So yes, it's a direct expense because it's directly involved. For each and every unit we have to pay. And also this is in the manufacturing stage. And production overheads means if it is a indirect labors, indirect materials, indirect other cost. No, it is a direct cost. We can identify and traceable for one unit of particular product. And it is not an administrative overhead. That's not an income statement item. So the actual answer is going to be the B for the 2.6. And 2.7, my dears, which of the following would be classed as an indirect labor? So indirect labor under the production overhead section. Assembly workers in a company manufacturing televisions, a store's assistant in a factory store. Already I have discussed the store assistant case in previous questions also. And plasterers in a construction company. An audit clerk in a firm of auditors. What is classed as the indirect labors? Indirect labors means the labor that is not directly involved and directly we cannot identify and traceable for one unit of product. So Nafis, Jamuna, Shwati, Abhi, all the people are mentioning B as an answer. Yes, definitely. The answer is going to be the B. Why? Because indirect labor means assembly workers, those are production lines. Actually, they are in the plant. They are the one touching the product and assembling the products. So they are direct labors. And plasters in a construction company. So in construction companies, the plumbers, the plasterers, those are directly involved. We can identify for one unit of construction how much we have spent for them. An audit clerk in a firm of auditors is a direct labor cost. We are directly involving with that service. But a store assistant in a factory store, he can assist for various people, but we cannot identify or trace for one unit of product. So that's what the answer is B. And let's move to the 2.8. Which of the following items would most likely be treated as an indirect cost? So indirect cost means it should be indirect materials or indirect labors or indirect other cost, production overheads. So the wood used to make a chair, or the metal used for the legs of a chair, or fabric to cover the seat of a chair, or staples to fix the fabric to the seat of a chair. What is your answer for 2.8? So Nafis is choosing B, Abhi is choosing D, Kavya is choosing D, Alafzar is choosing D, Rinosha is choosing D, Balin is choosing B. Students, I have to mention you, I have to remember you that on your revision kit, official study text answers, there are some mistakes. They have mentioned some wrong answers for the wrong question numbers. So please do not rely 100%. 90% of the revision kits are okay. But 10% there are some mistakes in the revision kit. They have mentioned wrong answers for the wrong questions. So don't look into the revision kits only. So the actual answers, guys, for the wood used to make a chair, just think about, right? So indirect cost means the cost which cannot easily identified with a specific cost unit, right? So the wood used to make a chair. For one chair, we can identify how much wood we have used. Yes, that's a direct cost, not an indirect cost. The metal used for the legs of a chair, there are 4 legs. We know how much of metal we have to use for a one leg. So 4 leg, one chair, we can directly identify how much metal we are gonna use for the legs of a chair. So BU also direct cost. At the same time, fabrics to cover the seat of a chair, right? The fabric. We know the length of the seat and how much fabric we are gonna use, and this is directly involved. So C also, it is a direct cost. And also the staples to fix the fabric to the seat of a chair. The staples means, guys, we will step with a stapler, we can do some staples, right? Although the staples, it could be probably identified. We can say we have a punched or staples for a four for a one chair like that. But it is ignorable, right? Although the staples could probably be identified with a specific chair, but the cost is likely to relatively insignificant. It will cost only 2 rupees or 3 rupees. The expense of tracing this cost is, not usually justify the possible benefits, right? If we want to trust this, we have to have a systems, we have to have a softwares, we have to record everything for 1 rupees, 2 rupees of staples. So even though if it is related with the direct cost, it is negligible, right? So the cost of the staples would therefore be treated as an indirect cost, as a part of the overhead absorption rate, simply. As I told you earlier when I'm teaching you, indirect materials, the consumable and negligible amounts. Negligible amounts are very small amounts. We are not getting any benefits. The benefits versus cost, the cost is collecting that information is higher than the amount. So that is, we can consider as the indirect materials, and we can put it how much staples we have used for the entire production, and we can put it as a production overheads, right? That make more sense. Then the answer is going to be the D. Okay, but for the 2.8, sometimes I think the revision kit is correct, but in some questions the revision kit is not correct. So the answer is going to be D, not B. The metal used for the legs of a chair, legs means there are 4 legs. We can identify for one chair how much metal we have used. Balini also chose B. Nafis also chose B, right? So you have to consider. Then 2.9, the prime cost. Prime cost might mean all the direct cost, direct material, direct labor, direct other cost. What's your answer? All cost incurred in a manufacturing products? Is it all cost? Or the total of direct cost? Or the only the material cost of a product? Or the cost of operating a particular department? What does it mean by 2.9? A very simple question. Prime cost means all the direct cost. It includes direct materials, direct labors, and direct other costs. So that's B. It's a very basic question. And let's move to 2.10. A company employs 4 supervisors. Okay. A company employs 4 supervisors to oversee the factory production of all its products. The salaries paid to these supervisors are: is it direct labor cost or direct production expense or production overhead and administration overhead? What is that? A company employs 4 supervisors to oversee the factory production of all its products, not only one product. So is it a direct labor cost or a direct production expense or production overhead and administration overhead? What is your answer for 2.10? So how you have to answer this question? So Balini, Netra, Jamuna, Abi, Abdurrahman, all are choosing C as an answer, a production overhead. Shwadi, Abirami, all of you. Abdurrahman choosing as a D as an answer, administration overhead. Abdurrahman, you have to consider carefully. The first thing is, supervisors for the factory production, is it administration? Is it going to happen in the office? For the production, its products means the production is happening in the factory. So the supervisors are in the factory. So supervisors are under the production environment, not in the office environment. So we cannot have answer administration overhead. It's a very poor knowledge. The administration overhead we can eliminate because the supervisors are not for the office employees. The supervisors are for the factory production, right? And other one is a production overhead, direct production overhead, and direct labor. We know very well supervisors for the factory production for all the products. We cannot trace and identify for one unit of product how much he has supervised. So we cannot say the direct labor also as an answer. Direct labor cost also we cannot say. So the options are minimized to B and C, a direct production expense, a production overhead. Direct production expense means what? Direct other expenses. No, direct production expense. If the word is direct is there, it should be identifiable and traceable and directly involved with a one unit of product. So that also we cannot say. So what is the correct answer? Then it is going to be production overhead. In our examples also, directly I have cleared you. Production supervisor salaries are indirect other expenses, or we can call it as a production overheads because that is indirect other expenses are under the production overhead. So that's what the answer is going to be the C. Did you understand this question, guys? So hope you understand this question. And let's move to 2.11, my dears. Which of the following best describes the controllable cost? So for this question, in the revision kit, they made a mistake, right? They have mixed and confused with an other question answer, right? So you are going to tell me the correct answer. Controllable cost, a cost which arises from a decision already taken, which cannot in the short run be changed. Is it a controllable cost? Already they have taken the decision, the cost also cannot change. A cost for which the behavior pattern can be easily analyzed to facilitate valid budgetary control comparisons. Is it controllable cost definition? We have a cost which can be influenced by its budget holder, or specific cost of an activity or business which would be avoided if the activity or business didn't exist. So what is our definition? What is your answer selection here? So Kavya is choosing D, Jamuna is choosing C, Abhi is choosing B, Balin is going to choose B as an answer. Shubhashini also B, is it? Fazmi is C, Nafis is B. So there are so much of mixed questions. Might you just remember what we have seen for controllable cost in our theory area. When we are classifying the cost according to the decision making, controllable cost and non-controllable cost. Simply I have provided you definitions. The controllable cost means the cost influenced by the managerial decision or actions. We can control the cost, right, by the managerial decision, so we can take some actions. So examples of cost control, I said short-term controls, the variable cost within the departments influenced by efficient resources. And there are levels. Some costs are not controlled by junior managers, but controllable by senior managers. Some costs are not controllable by one department, but which can be controllable by another department. And the long-term versus short-term non-controllable like inflation-driven expenditure, long-term controllable costs like cost reduced through strategic decisions. So this is how our theory. So how we are going to apply for this question? See, a cost which can be influenced by its budget holder. Very simple answer. C. We can influence. It means influence means what? We can avoid that cost, or we can increase that cost, or we can decrease that cost. We can do some sort of influence. By budget holder means who are the person holding the budget for that particular department. He has the control over it. Then only it's a controllable cost. The C is the answer. Most of you are missing the answers. Most of you choose in B. Why? Let's see. A cost which arises from a decision already taken, which cannot in the short run be changed. If it is not changed, you cannot influence. So that is an uncontrollable cost, not a controllable cost. A is not an answer. B, a cost for which the behavior pattern can be easily analyzed to facilitate with a valid budgetary control comparison. That is not a definition for the controllable cost. It is for the behavior pattern, like classification, like variable cost or fixed cost. It is not a definition for the controllable cost. Controllable cost means we have some influence, we have some controls over that cost. It might be some departments or some managerial levels or some action. Somehow we have the control. So the C is the most suitable. But the D, a specific cost of an activity or a business which would be avoided if the activity or business didn't exist. What does it mean? Avoidable cost. You know, when we are discussing the decision making purpose cost classification, controllable and uncontrollable cost, and relevant and non-relevant cost. So relevant cost are what? Relevant cost are avoidable cost. Right? We can't avoidable here. Relevant cost are avoidable. Cost that can be avoided depending on that decision. So that is under the relevant cost, not in the controllable cost definition. So the actual answer is C. But in your revision kit, they have mixed as an answer as a D, but D is an answer. So if you see in the 2.11, they have explained about something other questions. 2.12 or 13 in their answer, but they are mentioning 2.11 as a question. But actually for the 2.11, the answer is C. We have some influence. Okay. And let's see the 2.12 as an answer question. Which of the following items might be suitable cost unit within the credit control department of a company? Cost unit means what? The cost unit means, guys, it can be anything. It can be a department. It can be a person. It can be, a one unit of produced good. It can be anything. So the following might be a suitable cost unit within the credit control department. Credit control department means what? We are giving some credit to our customers. We have to control that. So how can we assign a cost unit? For example, how can we say in the credit control department for this particular activity, how much we have made as an expense? So there are three items: stationery costs, customer account, check received and processed. Right? What is your answer? Customer account, check received and processed, or stationery cost? Actually, for the 2.1 in your revision kit, they have explained 2.12 question. In the revision kit answer, actually for the 2.11, they have mentioned the answer and also the explanation also for this 2.12, not for the 2.11. So we can see, guys, the stationery cost. Okay. So the stationery cost and customer account. Customer account means what? Our customers, our trade receivables, if it is a credit sale. So for one customer account, we made some calls, we made some letters, follow-ups, and we are making some salaries for spending time and collecting that cash, and we are giving some discounts. So per customer, how much we have incurred as a cost? Can we trust or not? Can we use this as a cost unit or not? Right? So it is appropriate to use the cost per customer account. Also the check received and processed. We can say for the credit control department, we are receiving the check from the customers. So one check received, we have to check that one. We have to go to the bank and we have to make the deposit. So we need some time and we need to spend some time with a bank, with the queues, right? Also, we have to spend transport cost to go to the bank, and we have to hire some employees to manage that check depositing process. So can we say check received and process for one check processed? So these two are customer account and check received and processed. We can identify as a cost units for the credit control department. But the stationery cost, oh, it doesn't make sense, right? Right. So we can say the second one and third one, because the stationery cost involved, it is negligible sometimes. Sometimes it is indirect cost. Right? We cannot consider as a cost unit. We cannot transfer one particular unit. So the second and third items only. So the answer is going to be the D. Did you understand? Right? Stationary items are expense of the department. Therefore, it is not a suitable cost unit, my dear. Right. And 2.13, let's see which of the following best describes a period cost. I have mentioned, we have discussed about what does it mean by period cost. According to that explanation, what is your answer? The A, a cost that relates to a time period which is deducted as expense for the period and is not included in the stock valuation. I told you income statement items are period cost. So if it is a distribution expense or sales expenses or other expense, finance cost, are we included in the stock valuation? Just right. A cost that can be easily allocated to a particular period without the need for an arbitrary apportionment between periods. A cost that is identified with the unit produced during the period and is included in the value of stock. The cost is treated as an expense for the period when the stock is actually sold. Is it? A cost that is incurred regularly every period, example, every month or quarter. What does it mean by? In our actual definition, my dears, for the period cost, when I'm treating only, I said cost expense in the period incurred, including selling and administrative expenses. And also, essential for accurate valuation of inventory and financial statements. Right? This is essential. So now, what is your answer is going to be for this question? For the 2.13. Right? So guys, the period cost normally we are considering, okay? The period cost normally we are charging against the sales for the period. Period cost is equal to income statement item cost. It's not carried forward with stock to a future period, right? So period cost, it is also considering the factory supervisor's salary because that is a period. But normally in costing, period cost are income statement cost. So income statement cost like distribution cost, administration cost, those kind of stuffs, we are not gonna include in the stock valuation. So in the stock valuation, we will have a direct materials, direct labors, other direct expenses, and production overheads like indirect labors, indirect materials, indirect expenses. So it will consider the total stock value, right? So period cost usually it is considering the income statement expenses. So it is not included in the stock valuation. So that statement is absolutely pure correct. B, a cost that can be easily allocated to a particular period, that's fine, without the need for arbitrary apportionment between periods. Right? We cannot say that one. Sometime for that period, we have to apportion. Right? For the direct other expenses, maybe we pay in a bulk amount. Then once we did that total production cost, we will divide it by 1,000 units or 1,500 units we have produced. Then only we can get the unit price. So we will have to apportion. So that's not the answer. A cost that is identified with the unit produced during the period and is included in the value of stock. So it is included in the value of stock. That statement make this answer is wrong. A cost that incurred regularly every period, example every month or quarter, that's okay, but that is not a best description because they are asking the best description, right? So many period cost can be easily allocated to a period, my dear. That is okay. And it is incurred regularly every month. But the major difference is the feature of a period cost is in the context of cost accounting, it's not included in the stock valuation for the period. So the option A is the better description, right? So most of you chooses the D as an answer because in our theory, essential for accurate valuation of inventory and financial statements. So this statement may be help you to choose the wrong answers. So I will decide this. I will delete this statement. So I will include the note is So not included in stock valuation. Also, all income statement expenses like administration, finance, distribution, and interest expenses are period cost, not production cost that is included in cost of sales. Okay. So that's a lesson we have learned in 2.13. Period costs are not included in the stock valuation. But actually, if you are paying a salary for the factory supervisor, that is a period cost, but that is in the production environment. But in general cost accounting context, period costs are considered as income statement items. Okay. So fixed costs are conventionally deemed to be 2.14. What is your answer? Fixed costs are conventionally deemed to be concerned per unit of output or concerned in total when production volume changes or outside the control of management or those unaffected by inflation. What is your answer? So Jamuna is choosing B as an answer. Fazmi is choosing B as an answer. Abhi B. Subhashini B. Balini B. Netra is choosing B as an answer. Nafis is choosing B. Kavya is choosing B. So all of the people. So as you know, when we are discussing about the fixed cost here, guys, remain constant within certain activity ranges and unaffected by volume of output within the relevant range, often known as a period cost. But for a per unit, right? Per unit fixed cost, is it vary or remain unchanged? It's vary, my dear, right? So for a total fixed cost, for example, you say the cost is 50,000 even if it is 1,000 units. The cost is 50,000 even if it is a 500 units. Then, you know, per unit fixed cost, 50,000 divided by 1,000, it is going to be 50. But 50,000 divided by 500, how much? 50,000. If you divide it by only 500 units, it's going to be 100. So, per unit fixed cost is vary, but total fixed cost is remain unchanged. You have to understand this point. So, the fixed costs are conventionally deemed to be constant per unit of output. Is it correct? Is it going to be constant for each and every unit of output? What is your answer? It's vary, right? But constant in total when production volume changes. Yes, in total it is unchanged. It is constant. That's suitable answer. See, outside the control of management, no, that is not a fixed cost definition, right? That is controllable cost or uncontrollable cost. But sometimes fixed cost we can control or we cannot control. Even for the factory supervisor salary, it is a fixed cost. We can change the supervisors or we can hire some supervisors with a less amount of salary. It's under control. And those unaffected by inflation, no, that is not relevant for the fixed cost. So the answer is B is an answer. Okay. Right. So let's move to the 2.15. The following data relate to the overhead expenditure of a contract. Okay. So, okay, this is high-low method, so we cannot do this question right now. And 2.16, we can discuss this question. This is under our learning. The following information relate to question 2.16 to 2.20. Right. A linear variable cost when the vertical axis represent the cost incurred. Linear means there is no curve. It is straight lines. So a linear variable cost when the vertical axis represent the cost incurred. Vertical axis means this one, rupees. So when the vertical axis represent the total cost incurred, what is the variable cost graph? Is it graph 1, 2, 3, 4, 5, 6? What is your answer? A, B, C, D. Zainab, Vidushan, Shwati, Subhashini, Netra, Rinosha, Fazmi, Mohammed, Kavya, Jamuna, Bushri, Balini, Aparna, Amjad, Abirami, Abi, Abdurrahman, Nafis. What's your answer? So, Balini is choosing B, Subhashini is choosing B, Rinosha, Abi is choosing B. So, what is this, guys? So, the first one is it's a fixed cost charge. This one is variable cost. This is step fixed cost. This is one fixed element, then variable. So, semi fixed cost or semi variable cost. This is something of demand curve like that, right? There's a fixed charge, then when we are increasing the level of activity, it is reducing. And here, there is up to a certain level, it is fixed, then it is variable. So there is a semi-fixed or semi-variable cost. So a linear variable cost, when the vertical expression represents the cost incurred, is going to be the graph 2, right? We have discussed this. So the B is an answer. So the 2 means the B is an answer. And 2.17, a fixed cost when the vertical axis represents the cost incurred. What is that? The fixed cost is here. Graph 1, 2, 3. What is your answer? This is a fixed cost, right? Graph 1. We have discussed this. So the A is an answer. Very simple question. And 2.8, a linear variable cost when the vertical axis represents the cost per unit. Right? What is that? In a variable cost, we know the total variable cost regarding the level of activity is proportionately changed. But per unit, the variable cost, like direct material per unit, direct labor per unit, direct other expenses per unit, remains constant. If it is constant, which graph you will choose? Per unit variable cost. What is that? For the 2.18. That is A. Right? That is A. Very simple, right? Then 2.19, a semi-variable cost. It means there is a fixed element also. When the vertical axis represents the cost incurred. So what is that? There is a fixed element and variable. It's going to be graph 4. Graph 4, where is it? It is in the C for the 2.9. And 2.20, a step fixed cost when the vertical axis represents the cost incurred. A step fixed cost means what? For a certain range, it is fixed. After the range, it's jumped to the next level. So 2.20, what is it that? That is in the graph 3. Graph 3 means it is in the answer A. Very simple questions. Right. So let's move to 2.21. This is also high-low method. We cannot do that right now. And 2.22, a production worker is paid a salary of rupees 6,500 per month. Okay. Monthly salary. So period cost, fixed cost, plus an extra 50 for each unit produced during the month. So the labor cost is best described a variable cost, a fixed cost, or step cost, or semi-variable cost. What is your answer? So 6,500 per month is a fixed cost. And after that, an extra. How this graph will become? If we draw this graph, how it will be, guys? See? So if it is a graph, if I draw a graph, so there is a 6,500, then plus extra, it will be like this. So this 6,500, even if you are not producing any amount, it is 6,500. Then after that, it will increase for each and every unit, the 50 rupees. So the graph will be like this. So it is a what? It is not step, it is not fixed 100%, it is not 100% variable. So it is semi variable cost. Right? So the answers we can choose is D. And let's do the 2.23 also. What type of cost is supervisor salary cost? Where one supervisor is needed for every 10 employees added to the staff. We have discussed so many times. For every 10 employees, we have to hire another staff. So the total fixed cost will be changed up to the certain range. So it is going to be the step cost, my dears. We have discussed this. So the D is an answer. And 2.24, this is also a high-low method. So let's keep as it is. And this question, this is a general question. Which of the following is the correct definition of a cost unit? The cost per hour of operating a machine. Cost unit means what? The unit cost. It means it includes the direct materials, direct labors, other direct expenses like prime cost, and production overheads per unit like indirect labors, indirect other cost, indirect other expenses. Then after that we will come with the unit cost, right? So it is only the cost per hour of operating a machine, a cost unit. The cost of per unit of electricity consumed, or a unit of product or services in relation which cost are ascertained. A measure of work output in a standard hour. What is your answer? Choose. So Fasmi is choosing C as an answer. Balin is choosing C as an answer. Yes, this is a unit product cost or unit service cost, right? For one unit, not for only the operation of machine or only for electricity or only for the work output in a standard hour. No, it is actually for the unit. So answer is C. And 2.26, the 2.26, which of the following items might be suitable to cost unit within the accounts payable department? We have to pay to our suppliers. There's a department, there are some people are working. So for them to trust the cost unit is the postage cost. So per postage cost, where can we use as a cost unit, or invoice processed, or customer account, or purchase order processed. So for accounts payable department, every invoice, how much we have paid. To process that payment for every invoice, right? We have to call, sometime we have to call to the, every invoice we are going to pay, we have to call to that particular customer. We have to take the confirmation amount. And we have to make some wire transfer if it is an international payment. So there will be a charge. Sometime we have to go to that particular supplier, right? And we will incur some transport cost. So every invoice processed, how much we have incurred. So that's the best choice. Not the postage, not the customer account. Customer is a credit, trade receivable, not the accounts payable, right? So purchase order process, no. Every purchase order, sometimes we are making purchase orders, but we are not receiving the goods. So the GRN is missing. So how we can make the payment? No, right? So the actual answer is going to be the B. And the cost center is, guys, where the cost is accumulated. It might be a department, it might be a person, it might be a machine. So we are collecting the cost. That is something called cost center. So it's a unit of product or service in relation to which cost are ascertained, or amount of expenditure attributable to an activity or production or service location or function or activity or item of equipment for which cost are accumulated, or a center for which an individual budget is thrown up. It's a very basic question. This is going to be a service location or function or activity where we can collect the cost. So that's what the answer is C. Others are not an answer. And fill the missing word in the fill in the missing word from the choices below. A cost, a dash, is a unit of product, a service, or activity for which cost can be ascertained. What is that? Is it object, center, or unit? Cost unit or cost center? Where we can collect the cost or ascertain the cost. That is cost centers. Just now I have discussed. A cost center is a production or service location or function or activity or item of equipment which cost are accumulated or ascertained. Both are same word, right? So cost center is cost object. Sorry, it's a cost object. Okay, 2.28. It's a cost object. Object means like it might be a product or service where we can identify the thing. So these are not actually in the syllabus area, guys, but these are general questions. So cost object means where we can ascertain the cost. Cost center mean it might be a location or function activity where we can collect or accumulate the cost. Cost object mean is a unit of product, service, or activity which cost can be ascertained, right? And 2.29 also, it is a very general question. Identify from the following list which cost object is associated with a given business, right? So a manufacturing business, the cost object Is it a per item manufactured or per day worked or per labor hour or per employee? If it is a manufacturing business, we can ascertain per item manufactured, right? That's a cost object. If so, the answer is going to be for the A. We can choose per item manufactured. A passenger transport business, per person transport or per labor hour, per passenger mile or per employee. This is going to be per passenger mile, my dears, not a per person transport. But these questions are very subjective. You are not gonna have this kind of questions with the confusions. You will have questions in your actual exams with a very accurate answers. So the per passenger mile is a passenger transport business cost object. And an accountancy firm, per report produced or per client, per chargeable hour, per accountant, right? Per chargeable hour, it can be a cost object, right? So that's how we can choose. And 2.30, okay, from 2.30 to 32, 34, 35, and 36, 37, almost all the questions, we cannot do it right now because there are some calculation methods like high-low methods, scatter diagrams, and some other methods we have to discuss the theories. But almost 80% of your this chapter I have covered. And the next class, I will cover the 20% of your cost classification chapter 2. Then we will do the remaining revision kit questions. So tomorrow session or next session, we can cover this chapter 2, right? So it's a long hour class, guys. Thank you for your patience and being in the classes for the entire time. And I will share the updated notes most probably tomorrow, right? Before next class. And thank you, guys. Thank you for being in the class. See you all of you in the next classes. Have a great day. Bye.